when I think about like, what a future for crypto looks like, I think we're moving in the right direction in a lot of different ways, right? We're seeing lower latency blockchains, we're seeing higher TPS, better proving systems, but really at the end of the day, we can build the best infrastructure possible. But if people aren't building applications on top of it, then it doesn't fucking matter.
This episode is brought to you by Perennial Finance, the on-chain DeFi primitive redesigning derivatives for the DeFi native. You'll hear more about Perennial later in the show.
Welcome back to another Thousand Next. We have a very special guest here who I'll introduce in a second. But just to take a step back, Jonah and I have been talking about making real investments and doing real things and finding things with real product fit and real value in crypto and how difficult that is. So with all of that in mind, we've brought on Smokey from Berachain today, which when I first found out about it, I legitimately thought this thing was a complete meme. I think this was 2 years ago. I just thought it was a joke. And then it actually turned into something very real. And Smokey's here to explain to us how it is both real and not real at the same time. Welcome, Smokey. Glad to have you.
Thank you for having me, guys. Yeah, truly the duality of man or bear, if you will. Yeah, that was actually really funny. I don't know if you still remember, Avi, but back in the day when you slid into my DMs, it was because there was a pasta going around on like Twitter, and it was like Berachain does not exist, and like a few more lines, and you just hit my DMs with that, and then I responded with the exact same thing, and I think we repeated that for like 4 or 5 iterations, and then you're like, anyway, what the fuck is this thing, and like, should I be investing? I was like, yeah, totally. And then that somehow devolved into us making fun of you and Steve Tannenbaum and a number of other things.
Yeah, that was a hilarious introduction because I genuinely thought this was just a meme coin launch.
Yeah, me
And
too.
I didn't really know what it was. I just thought the content was really funny. And every time I saw it, I would crack up. I looked at the bong bears. I'm like, dude, this stuff is great. But when I originally was talking to you guys, I mean, I couldn't really wrap my head around what the hell you guys were actually trying to do other than just be hilarious. And fast forward 2 years, you've done a lot. You seem to have accomplished a lot. I see like some pretty insane headlines in the news, like Berachain raises from insert all top VCs that have ever existed. And and what's kind of fascinating to me is that you've managed to combine this sort of like weird whimsical nature with what seems to be real tech. Um, Dude, how did Berachain even start? Like, what did how did you come up with the idea?
The backstory is honestly like a series of unfortunate then fortunate events, if I think about it. I'll give you like quick background on myself, my co-founders, without doing too doxy. Myself, my co-founder Papa have been in the space for like the better part of the decade. Definitely not like OG ETH ICO, but a couple of years after. We're both originally founders in the healthcare space, raised and scaled companies, raised venture capital, blah, 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 did the whole shebang in the Valley, all your classic meme bullshit. And of course, had fun along the way buying shit coins. One of my first investors in my first company was pretty senior at the ETH Foundation back in the day. So, when you're living in the Bay Area and seeing a whole bunch of people, running in a given direction, you either think everyone else is stupid or you're stupid. And I know for a fact I'm very stupid. So I decided to, at least take a shot and follow the crowd a little bit, and, fuck around the space. And then I think like watching the market evolve, over the 2017 to 2018, like absolute meme ICO cycle, and then like more interesting, unique things popping up in terms of Uni and Curve and Aave and Compound and Yearn and everything else in between and DeFi Summer, was always keeping a pretty steady pulse on things while, effectively in my day job as a founder than a VC. And I think that at some point it was late 2020 / early summer 21 when Pop and I had been messing around with a whole bunch of like these like DeFi 2.0, I'd say ecosystems and discords. So like Frax, Alchemics, like all that kind of stuff. Olympus, of course, can't forget the boys. And we found that like NFTs were starting to take an interesting turn. On one hand, they were starting to become a little bit more financialized and like beyond your 10K profile picture collections. And on the other hand, you're starting to see things that might have interesting utility as much of a meme as that's become, 3 years in the future. In that, like I think it was like Parallel that actually was like a little bit of an aha moment for us. And they were like, oh, cool. These like, high quality Magic the Gathering / Hearthstone on chain type cards. And, they're going to have like revenue accrual potential. They're going to turn into something that's more than just like, look at my ape, bro. And we thought that was interesting. So of course we chose to launch an NFT collection of 100 completely useless bears smoking weed because we thought it was funny, having been inspired by the greats. And it honestly just started as like, hey, let's see what we could do with the NFT project and see where we could take it. It was like, it was very much, make it up as you go. And we actually decided to raffle these off at like 0.069 ETH in a whole bunch of different like heavily DeFi oriented discords. So what we ended up doing by accident was cultivating this like initial community of bong bear holders that were highly left curve because they're willing to buy a JPEG of a bear smoking weed for no apparent reason. But like, pretty DeFi native and tuned in and sharp as well from the communities that they came from. And I think after enough times where the group was like, when marketing, what happens next, like when roadmap dev, we were like, maybe we should do something like kind of spicy with this and see where we can take it. So we decided to make those NFTs like, effectively rebase, definitely not, 8,000% APY, good old days rebase, but expand over time such that if you hold one of the first NFT collections, then you would automatically be entitled to claim one of the NFTs from the second collection for free, with a small amount being minted as like inflation every time, so that new people could enter and like buy into it. And what we ended up doing over the course of like 4 or 5 collections was effectively bootstrapping a community of a couple thousand like real users, which feels like an oddity nowadays. In terms of people who are like, on one hand, like, hey, these are kind of fun, like liquidity game theory mechanics with these multiplying bears, and on the other hand, maybe there's an actual interesting like end game or community there. And at some point, we'd actually talked to like the Olympus guys about what it would look like to build Ohm Chain, just because we thought that was a funny and interesting concept. There was, whole thoughts about what a reserve currency could actually look like. And despite, perhaps falls from grace or a number of reductions in sentiment over the past few years, I think there were a lot of cool ideas that came out of like the, Olympus slash DeFi 2.0 ecosystem, like protocol and liquidity, and a lot of that stuff really did sort of like find its existence there. Um, and at some point, after talking to those guys for long enough, along with the own community that we had developed, who was largely like traders, developers, retail users, we just tried to better understand like the problems that they were facing in their day to day, like user environments. And one thing that came up a ton that was just kind of silly at first thought was just the trade off that was experienced between liquidity and security when someone's actually allocating capital on network. And that 9 out of 10 times it's okay. I have 32 ETH. Do I run a node, or do I toss this in do I toss this in like your Dexes, your Uniswaps, your Aves, what have you, and stuff like Lido and Eigenlayer has very much started to move this in the right direction in terms of allowing like want to use LSTs to go a lot further. But nonetheless, that isn't actually like sort of that's not really a native slash out the gates thing, right? It's something that you opt into. It's something that's very much an option. It's not a default, if you will. And we thought to ourselves that it was really illogical, especially after viewing so many like ghost chains in that 2021, 2022 cycle with hundreds of millions, if not billions of dollars securing the chain, but absolutely, zero capital or activity actually active on the network, that this had become the metagame. So we thought to ourselves, what if it was possible to effectively build an ecosystem that allow you to effectively, align incentives between liquidity and security at the protocol level. And I think more importantly, along that time frame as well, we were in the peak of like this sort of bullshit zero interest rates phenomenon, like throw grants at everything meta, where the only differential between a builder going to chain A or chain B was how much money are you going to throw at them, which I think is like incredibly cursed, completely stupid, and just generally a waste of time and funds, and attracts the wrong type of builders. So I guess the secondary point in the back of our heads was, is there a way that we can actually build a system, from a mechanism design, incentives design point of view, if you will, at that protocol level that's meant to drive value to the application layer? Because when I think about like, what a future for crypto looks like, I think we're moving in the right direction in a lot of different ways, right? We're seeing, lower latency blockchains, we're seeing higher TPS, we're seeing, effectively better proving systems, so on and so forth. But really at the end of the day, we can build the best infrastructure possible. But if people aren't building applications on top of it, then it doesn't fucking matter. And I think there are some very like clear use cases that are quite basic in terms of stablecoins, payments, etc. But I think my strong belief is that if you don't have applications that are uniquely built or existing in an on-chain environment, then there's very little impetus for someone to actually go from a Web 2 world to a Web 3 world and start actually using them, right? And we see Berachain as more than anything a bet on the application layer powered by the chain itself. So if I sum this all up and put these rambles into a nutshell, we thought that it made a lot of sense to build Berachain because it's the first L1 that allows users to effectively turn their liquidity into security without adding leverage risk, etc., and actually use that liquidity to help power the protocols that are building on the chain itself. So hopefully that gives a little bit of context on, the story, how we got here, all that kind of good stuff.
That is a deeply articulate take for a bear. I appreciate it.
Years in the
It's good.
forest, man.
What's kind of interesting is that we've been talking for a while about how it's sometimes hard to see how you derive value for the base layer from the application layer, right? In theory, the application layer at some point in the future should be worth a lot more than the base layer, because the applications are what's actually driving people to use the platform. It's what people are actually engaging with. In theory, they should be able to, generate some economic value because of that. Now, in the cases of chains like Solana, or really, really high throughput, high scalable chains, having that value, accrue back to the chain, it's a little bit tough. I mean, the chain is effectively just a place for you to run code, right? That's it. And you get some security for that, but it's just a place for you to run code. You've brought this idea of the application and the base layer a little bit closer together, right? That's sort of what you're tying it together. But one question for you is, does that improve stability of the platform, or is that, are there risks to embedding applications so closely with the base layer in terms of security, like what you're describing?
Yeah, I think it's all a matter of like nuance in the process, right? So the way the Berachain works, like at a fundamental level, is that while the network itself is still secured, like from a stake perspective, by the Bera token, which is like the gas token of the network, is like relatively generic in that sense, used to pay fees, etc. Where it actually does become interesting is like the flow of value and the flow of emissions across the network. So in like a typical proof of stake chain, right? The vast majority of those emissions and block rewards, as the chain inflates or as more blocks are produced, end up going to validators and their delegates, right? And in most cases, in a lot of cases in proof of stake chains, they just sort of end up going to the validators. And while they play a very important role in maintaining the security of the network and keeping it up and running, they aren't necessarily the groups that are actually like driving new value or bringing new applications, like we talked about, into that network itself, right? And I think that in a world where the biggest meme is like, cool, we've got all this infrastructure and all these layers for people to build stuff on, but no one building things on it, or users to actually use the apps, that seemed really counterintuitive to us as well. So the way that Berachain actually works is that validators have to post a standard bond with Bera to effectively come online or turn on their validator, but then they're also able to get BGT delegated to them. BGT is the illiquid, soul-bound reward/emissions token of Berachain, which is what block rewards are actually given out in. Now, the thing is, the only way to earn BGT is via providing liquidity on the network in a set of different venues. When the chain goes live, this is a pretty vanilla/pretty basic set of DeFi primitives. So a DEX, a perps vault, and a stablecoin lending market. But over time, and this is where things might get spicier from a security, etc. point of view, is that it can extend to really any application on the network as voted in via governance. So you could think of it as like curvification of the chain from an emissions perspective at the network level, right? And instead of those emissions only being able to go to pools and a DEX, they're actually able to go to any smart contract on the chain. Now the thing is, a given validator always has the same likelihood of proposing a block. However, a validator with more BGT delegated towards it, i.e. more people who have provided liquidity choosing to delegate towards it, will produce a larger block reward when it actually produces a block. So in this way, the security of the network is not actually threatened in any manner, because there's always Bera at stake securing the network. But the validators that have effectively worked with the people who have provided the most liquidity to the network stand to gain the most from producing larger block rewards when they actually hit a block.
This episode is brought to you by Perennial Finance. Perennial is quickly becoming one of the go-to derivatives platforms and liquidity layers for all of DeFi. So let me tell you a little bit about them. There are kind of three things you need, right, when you're thinking about a place and a platform to trade on. First one, great trade execution. Second one, low fees. And third, of course, an on-chain permissionless platform. And Perennial nails all three of those buckets. With the launch of Perennial V2, they've made all of that possible by introducing a ton of new features, such as faster oracles, which reduce trade execution to seconds, lower fees, competing with major centralized exchanges and minimizing fees for both takers and makers. fully modular markets, which allow the protocol to support any price feed out there. And fourth, cash settled, right? The trades are cash settled in USD, not in crypto. Perennial allows you, the trader, to gain access to deeper liquidity with only a fraction of the TVL. How it works is that Perennial enables a two-sided market made up of both traders and liquidity providers, right? Traders deposit the assets to get levered exposure, while liquidity providers provide these pools of capital to earn fees for taking the other side of the trader position. Perennial allows you to trade crypto, perps, FX, and coming soon, NFTs and more. Backed by some of the best investors in the industry, Perennial is a must-check-out platform if you're a crypto trader. Go check them out by clicking the link in the description. Give ThousandX some credit. Go check out Perennial. You're going to love them. All right, let's get back to the show.
Okay, so just zooming back out a bit. I have this sort of theory about crypto right now that I've taken a lot of heat for, and I wanted to run it by you because it ties into that specific point you just made. Basically, I'm worried that just like you just said, there aren't enough apps showing up. There aren't enough people building applications that users want to use. There's a lot of infrastructure getting built everywhere, but like you said, applications need to show up and attract users. Otherwise, what the hell are we doing here? So my thesis has been that we don't need more infrastructure. We need people to build killer apps. The pushback I've gotten, which I would assume you probably agree with, is like, hey, infrastructure has been built and there's a lot of it around, but there isn't the right infrastructure. And so, to your point about incentivizing a certain type of activity on your network that's conducive to a certain type of app building, like, I guess here's my question for you. Bit of a long-winded question, but bear with me. Back in the day, Near did something very interesting, which is that they rewarded economic activity on their network by basically paying developers in Near proportionate to the amount of smart contract activity that a given app would generate. And I thought that was really brilliant. That's like what the dollar does. You participate in the system, you get rewarded in dollars. That's how petrodollar economies work, etc. So they built this empire, this sharded, amazing technological empire with that premise, and nobody showed up to the party to build apps. Can you maybe touch on why it is that your liquidity-based reward system, which is, similar but actually very different as well, will reward a certain type of builder to show up and build like what type of app?
Yeah, no, great question, man. I think that it bears resemblance, like some like the CSR type stuff we've seen even like the last cycle or two. And I do think that unfortunately a lot of those metrics end up being gameable, which is why I think both the mid-curve take and the correct take is that social consensus and capital consensus is actually what should drive incentive distribution. And I do think that that's very much what the Berachain system sort of enables, right? And just to double click on that a little bit more, each validator effectively has a gauge, and they can choose how they would like to direct the emissions when they win a block, right? So they could say, hey, I've got a bunch of capital in this pool as like myself as a validator, I'm going to put all of my emissions there. Or they could say, I'm going to put 20% on this pool, 20% on that pool, 20% on that one, 30% in this options protocol, whatever it might be, right? Where I think that gets more interesting is when you add or you explore the incentive marketplace that's built on top of it. This is probably what one would think of most conventionally in DeFi as bribes. So you can actually have an application go and say, I'm going to give you as a validator, or I'm going to post a bribe or an incentive that anyone can pick up and say, in exchange for X amount of emissions, I will give you Y amount of my token to be distributed amongst myself as a validator. I'll take some commission on it, and my delegates who've chosen to actually, provide to delegate BGT to me and give me voting power, right? And with that, you actually cause, I'd say, a new layer of that market to emerge in which people can basically, decide their own risk preferences and what they want to get more exposure to. Now, that doesn't answer your core question. It just more answers the idea of what is it that actually makes this more interesting, perhaps for a protocol in the first place? It's that they can decrease their cost of capital, right? And instead of just doing a classic pool to sort of liquidity mining type program where they're pairing a token against their own token and then emitting a whole bunch of their own token, they're actually able to actually, effectively pay a small amount in their token and ideally, based on, an effective market, receive a number of emissions in the form of that, chain's token itself, BGT, which one would hope is, value accruing and useful over time, right? But I also think the answer is, and this has been the biggest deficiency as I see it in most ecosystems, is this like laissez-faire attitude that if you build it, they will come. I think that's retarded. I think that if you build it, no one will give a shit. And I think that you have to go out there and aggressively tell people what solutions you have, why they need it, and why it's a good fit, right? And I think that we've seen so many people pontificate and build castles in the sky about things that have ultimately yielded very little to nothing. And maybe they do in the 5 to 10 year time horizon. but I very much believe in like power law distributions. And I think that if you, go and hit up 100 different teams and, 10 of them are half decent, then again, out of those, maybe there's a chance that one of them turns into a unicorn app. Right. So if you're not going out there and chatting with hundreds, if not thousands of builders, then the chance of finding the next, milestone, like just lodestone crazy app, the next Uniswap, the next GMX, whatever you want to call it on your chain, is near zero. So, I think my broad answer to that is I think that you can have all the right base plates from an incentive design or from like a builder point of view. But if you don't go out there and do the work, then it's ultimately useless. Having the right design just sort of helps remove friction as I see it, but by no means guarantees outcomes.
Wow, that's a fantastic answer.
I will say that you guys have definitely figured out how to go out there. The community and the memes and I mean it's just absurd, honestly, what you've been able to, like the cult that you've been able to assemble. And I think that had to have been somewhat intentional to build what is effectively a meme coin cult around real product in a way that I haven't really seen since Link. You guys remind me a lot of Link. I'll be honest. Like
Yeah, no, I love
a
that.
lot of like pretty like deep hardcore in terms of community at least, and then also backed up with some at least on the side of Link, somewhat real tech. And I think that it's kind of interesting to see that combined, because it's really hard to do that. It's hard to thread that needle to be both a serious serious builders, but then have fun while you're doing
it's like it's whimsical.
I think a lot of people take themselves very seriously.
What's crazy about it is like okay, so let's take a TradFi lateral, right? If you were going to start a hedge fund, you wouldn't name it like Pissant Capital LLC. So everybody's afraid to do things
Jonah,
like
that's a great idea.
Yes, let's start this, Avi. let's go found it. The thing is, because that doesn't attract
LLP.
investors. LLP. And so because like investors don't want to put their money in something that with a name like that. And so what you get is just this like the opposite end of the spectrum. Everything is named like Bridgewater, Bridgestone, Stonebridge, Citadel, Castle, and it's all boring. You kind of hit that middle of the gradient, which is perfect. Like your background is Jesus Christ is a bear with a bunch of bear apostles. It's friggin' hilarious. Like it's whimsical, but it doesn't sacrifice the sense of like you're safe on this chain. It's you struck a very, very difficult balance.
But also,
like
why bears? Bears make price go down.
Yeah. Bro, you know what so I don't know if you guys saw, but for our for April Fool's like gag this year, we like rebranded to Berachain for a day, and we like dropped this video that showed like the running of the bulls and stuff, and like how we were going to build a perpendicular EVM L4 to Cardano, and I think that's exactly it, right? Which is to say that I also believe in, I don't know if you call it horseshoe theory or a barbell distribution, if you will, but I really do believe that the left and the right curve even out at some point, and that to win you need to be both highly retarded and highly competent, at least in a space like crypto, where the industry is so new, but it also very much caters to like a younger demographic as well, right? While we are seeing the Fidelities and like the Franklin Templetons and so on and so forth, like starting to actually plow in here and get involved, in many cases they're involved by they're being advised or they're taking a good look from someone who is more likely closer to our ages, right? And I think you have to be able to appeal to that population too. I think I also realized a while back that between like our founding team and like just the guys who we have on board and what we've seen of the space over time, we weren't going to win by being fed chain. There's no world in which we try to come off as, I think, polished as Sui or like Miston or like Polygon, depending on whether they're making Polygon jokes or not or whatever, right? And ended up in a position of power. I think we realized that we very much had to carve our own path and carve our own brand, right? And the bears, it just felt fitting because it's like, okay, if this whole thing is going to evolve out of an NFT project of bears smoking weed, then we might as well just like run with it. So we didn't even we called them the Bong Bears. And then someone came into the Discord being like, ooh, Bonga Bera. And then we're like, hey, that's pretty funny. And then we just kind of ran with it. And I think that's been a lot of like...
This is a random guy? This is a random
random motherfucker.
Is he a core team member now?
Bro, I think this man like dropped off the face of the earth like a couple of years ago. But like, his impact is felt and lasted. And I think for us, like what we realized at some point is that leaning into that like whimsical nature, if you will, and being able to execute while also being kind of silly, was a space that had not really been fully explored or done right at a protocol level either. And it also
Well,
just sort of felt like correct for us.
to your point, like the virality is so critical because you can't just build it and expect people to show up and build amazing apps. So here we go, Smokey. Get ready for the best transition ever. You built the bear chain during build a bear during the bear market of 2022. Tell us what that was like. Very few products launched or got conceived of and worked on back then. Most people were just busy throwing in the towel. What was it like
Like kind of
building in the bear?
like roping themselves. I think
Yeah,
the
yeah.
concept of
There's
working hard wasn't really a thing.
there's a healthy amount of rope around the office, but I think that we we managed to grind through it for the most part. I guess when I think about that, I probably attribute it to a couple different things. One is that like the community sentiment has always been pretty meaningful, right? I think that on our side, I think we've typically seen chains built by someone being like, okay, like I've got a prof at X or Y university, or someone out of X or Y research institution. I'm gonna spin this shit out, raise a bunch of capital, and try to make people care. I think we took a very opposite approach, which meant that we effectively had a bunch of people who like kind of cared from the beginning, and then as more and more stuff came together, they still kind of cared. Um, and then, as we worked our way along and sort of iterated on the idea, we saw more people popping up and, saying, hey, I want to build this. Hey, I want to build that. And I also think that like having seen some of these like, just growth or business development relationships mature over the last couple of years, I think that period of like trauma bonding was also kind of important. It's like when you get hazed in a frat, right? Like you go through some shitty times together, but then you end up being closer over a longer period of time, right? So I think that with that, building through the bear was a pain in the ass, but it wasn't the worst thing. I think that if we had a live product at the time, I probably would not have enjoyed it quite as much because I'm sure it would have just been, doom and gloom and people being like, when will devs fix price, etc. Which I truly feel for all of our comrades who had to go through that. But I also think it provided massive like turnaround opportunities or massive, like just hero moments for some groups that we're big fans of. Like I remember talking to the Pendle guys in like I think late summer, like early fall of like 22. And at the time, they were sort of like figuring out, I think, end of V1/early V2 and what that was going to look like. And, completely rebuilding their internal pricing models. And the market had absolutely destroyed them. They're at like a 4 or 5 mil market cap. And I talked to them and I'm just like, yo, these guys are cracked. And like, I'm pretty bullish on interest rates derivatives. So like, I feel like I should pay attention to this. And I wish I bought a bigger bag, but then I saw them like, absolutely kill it for the next couple of years, right? And, kill the points meta, kill the LST meta, everything alongside it. So I guess like I find that the whole building of the bear thing is just more of a barometer of like griftiness, and or like mental fortitude, which is to say that if you're a grifter, decent chance you tap out there, and if you're mentally weak, decent chance you tap out there as well. I think that we were fortunate to not be in either of those scenarios, and it gave us a bunch of good time to go heads down and figure some shit out. That being said, like raising towards the end of that was a pain in the ass. I remember we were closing up our Series A like a week before FTX blew up, and then FTX blew up as we were still like taking wires and stuff, and it was like, this is less fun than it was a couple weeks ago. So that was definitely an experience.
Wait, was FTX committed to being an investor at that point?
No, fuck that. We were not taking money from FTX, bro. We had a conversation with some of the
Your
members
call.
on their team, and they were really unimpressive.
That's really funny. I remember at that point they were basically just throwing money at everything that they could. But then the way that they would do it is they would come up to you and they would say, "We are the best thing that's ever happened to you. Take our money and give us the best terms ever."
Yeah. We do not negotiate with terrorists, so it did not, no such luck over here.
Yeah, that was a different time. That was good. It's good you guys persevered through. That was I don't think I've ever wanted to rope myself that hard after FTX. Because like I remember I was sitting there in the TradFi world, and it's always both the best feeling and the worst feeling in the world when TradFi looks down on you with disdain and disgust. Because on one hand, you have to deal with all of them, but on the other hand, you know how good it's going to feel when it starts going back up
Yeah,
again
yeah,
and they're not in it.
yeah. That comeback arc's gonna be crazy.
Yeah, it hits different. The coin rips, and everyone told you 3 months ago that it was going to die. You're just like, oh
I'm
yeah,
alive.
shit's alive. And also, I mean, what really hits different is when you try to explain to somebody that you invested in something called Berachain, and it's like returned you meaningful capital, and they look at you and they're like, I invested in Walgreens and it's down 25% today.
Dude, anyone who invested in like biotech during the 2021 like COVID vaccine boom and whatnot, oh my God, I had a lot of fundamentals homies being like, "What the fuck are you doing in these internet coins, sir?"
Yeah, this is honestly hilarious. But I mean, somehow through all of this, you managed to get some TradFi money. I think I saw in the latest headline. Who was
Yeah, it
it?
was Brevin Howard who
I
was
said
on the
it, Brevin
co-leads.
Howard. Brevin Howard, yeah.
Yeah, yeah.
And they're pretty. I mean, I know they have a crypto business, but they're pretty TradFi. I mean, what is it? What is it like? Like, what is it like sitting in front of somebody and trying to pitch them something serious while also needing them to understand that it's like supposed to be a joke because that's good for it, right? It's like a good thing.
Yeah. Yeah, well, like compliance definitely didn't get it too easily, but like they figured it out at some point after a lot of leg pulling. I think that the good thing is like the partners at Brevin have become increasingly crypto native over time. They picked up the guys from the Dragonfly Liquid Desk, et cetera, who were good friends and early investors of ours, so it made that transition a lot smoother. And then I think there's also the fact that, like in a past life, like myself and Papa and like a lot of our team members, we were suits, right? Like we've had to be serious on extreme occasion. It's something I really do try to avoid doing, but when necessary, you got to do what you got to do. And I think that we were, capable of cleaning up. And more than that, I think just like allowing people to take a peek under the hood and get past first impressions. And I find that really does tend to be an interesting cognitive dissonance activity for us. I think there were a lot of people who at some point, wrote us off. Or were like, this is retarded. Like, what the fuck is Berachain, man? Like, this can't be serious. And just sort of formed a very strong opinion based on that. But then it's sort of the same thing as you mentioned earlier with the markets, right? When we actually chatted with them and they got a chance to like, look under the hood a little bit, like, oh wait, maybe these guys are actually like, onto something here. And that reversal of like, someone who's highly against you to extreme zealot tends to be a pretty powerful one if you pull it off properly. So I think that definitely also leans in our favor. But I think you're totally right, man. Like there was a number of times I remember around the time that we were finishing up that raise, our Series A, like Kanto was live, Evmos was live, and everyone was like trying to compare us to that, and we were just like, okay, cool guys, like not lots of respect for those teams in some cases, but I just think that that's inaccurate, and we'll let the market decide. And I think the market has made some noise since then, perhaps in one direction. So I
Yeah,
think it's
those 2 names I have not heard in a long time. So
yeah, right. I think a lot of them onto cool, interesting ideas. Just like, and I don't think by any means that we've found ourselves in a position of success yet. Like we still have so much to prove, and we can still fuck up so many different things. But I just think that like it was very easy for people to mid curve, and uh, and also for institutions, especially to be like, oh, but isn't it just this? And it's like, no, not really.
Well, hang on. So on that note, what does success look like? Like, I mean, obviously there was a period of time during the post 2021 euphoria when, every new L1 was, it's like, all right, get a couple dexes on there, something that looks like a club, something that looks like Uniswap V3, and a few like basic infrastructure plays, maybe an L2, depending on the chain, blah, blah, blah. But like, I get the feeling that your chain, I think it has one of the highest throughputs TPS in the entire crypto space. It's capable of processing immense amounts of computation. Um, like surely, talk to us about your ecosystem and what success looks like and what types of apps you want to see just crushing it on your chain. And I'm sure the answer isn't, oh, just like something that looks like Uniswap but on Berachain, or oh, just another club. What is it? What does it look like?
For sure, man. So, one thing is I always try to be super, direct and honest about where we are, like where we do win massively and where we don't, right? I think that I'd love to see us and we have, thoughts on how in the future we can be incredibly scalable. Right now, I think we see ourselves as like one of the fastest slash most efficient, if not the fastest slash most efficient L1 designs. I do expect groups, sorry, I should say EVM compatible L1 designs because like, I'm sure that Solana's faster than us and Sui and Miston have their own, time frames as well. I think that what we have that's pretty interesting from a tech point of view, really quickly, is that like Berachain is actually the first completely EVM identical L1. So I think you've heard a lot of people say EVM compatible, Polygon, AVAX, etc. And that means vast majority of things are compatible, but it's still in many cases maintaining some degree of a guess fork. What Berachain actually has is like an identical execution environment to mainnet, in that like you can run Berachain / run the ETH environment using like Nethermind, like Aragon, like Reth, what have you, any of these different like execution clients. And for that means that we don't need a team of 20 researchers trying to figure out how to maintain a Geth fork. It actually means that if there's an EIP or if there's something that actually goes into place on mainnet or it's upstreamed, we can make that change very easily as well. So that compatibility saves us a ton of trouble and also makes it super easy for people to build scaling solutions, rollups, everything in between on Berachain, which we're actually already seeing prior to launch, which is like pretty exciting for me. And then the other thing is that we use Comet BFT consensus under the hood so that we still get that single slot finality that's really nice to have. And is one of those things that's on the Ethereum roadmap. Definitely I don't expect Ethereum to implement it in the same manner as Comet, to effectively caveat that, right? But I think we really do end up with the best of both worlds in terms of like a super EVM identical environment where if you could deploy something on mainnet, you could deploy it on Berachain without having to reinvent the wheel or do extra legwork, which tends to be a point of friction. And you get that single slot finality, which is super nice from a transaction, execution ordering point of view. More importantly, though, like I think that success looks like Berachain being the ecosystem where people go to see cool new things being built. And I don't know if I necessarily subscribe to the concept of an ETH killer. I think it's possible in some senses, but I don't necessarily know if that's like, I don't think that's the game I want to play. The game I'd much rather see us play is one where if you were looking to find the most interesting new applications that actually do have a shot at product market fit, they're coming to life on Berachain from a cultural and liquidity point of view. And this sort of goes back to what I was talking about earlier in terms of like shots on net, portfolio construction, power laws, whatever you want to call it. The structure of Berachain is meant such that validators drive incentives and drive rewards towards the application layer. And I see that as effectively an enabling factor to give the most number of applications the best amount of, shots on net and opportunities to like reach escape velocity, to break out and actually get real adoption. So, what I would love to see is like those next groundbreaking apps that end up defining the crypto space as a whole, like living on Berachain and then finding their home there before going multi-chain, or effectively having that as their home-based settlement layer, whatever you want to call it. And there are a ton, so I'll think about ones that come to mind right off the top as cool ones to start. But like, one of them that I've been yapping about a bunch recently, and I bet you guys would probably think is cool as traders, is called Exponents. It's effectively a pretty new take on derivatives, in that on one hand, it's something that we've seen a little bit more recently in terms of allowing you to take leverage on long-term asset or on long-tail assets, so perps on shitcoins. But the part that gets really cool, if you ask me, is that they've actually added a different incentive layer on top of that. In that it's not just longing or shorting, here's your funding rate, etc. They've actually added a separate incentive layer such that one can actually speculate on trading direction and say, hey, I'm going to bribe someone or incentivize longs or incentivize shorts specifically. So you can actually have like, coins PvPing each other in a more explicit manner than ever before, if you ask me. And that, if you're like Trump versus Bowden, for example, you can be, bribing people to short one coin while long another, which I think is very cool beyond just like, incentivizing LP, which has been the meta game to date. I think that's really cool. I think it's something that relies on, effectively the velocity of capital, and something that turns into a pretty crazy, like, yield sandwich when you think about that in a Berachain environment. You could have a given pair there. They use sort of Uniswap spot arbitrage style pricing, but with leverage to actually determine like the fees that are generated by the protocol. And then you add that bribe layer in long and shorting on top of it, and then you add proof of liquidity and missions on top of that. Like, that in itself becomes a really cool set of applications for someone to build around. There's groups that are building, funkier stuff in the consumer space. I was telling you guys a little bit prior to the call. There's one that I've been calling vape to earn on Berachain. It's actually quit smoking to earn, but it's called Puff Paw. It's super cool, and then a bunch of really sharp guys who've shipped like 75 million vapes to some of the leading tobacco manufacturers / vape manufacturers in the world, and are partnered with some of the largest like quit smoking applications in the world. And it's actually like a custom made like D-pin vape that incentivizes you to decrease your nicotine usage over time, and you get like more tokens for using less nicotine until you get down to effectively a green tea extract. That one's an absolute
That's
trip.
that's actually really cool. It's the first time I've ever heard of an application in crypto that actually helps people with their health. Everything else destroys your health.
I think it's really cool because like my thesis on a lot of these like I think the tokens are incentivization tools in many cases, right?
Mhm.
And what they do is they actually take a behavior that people are already accustomed to doing and allow them to potentially financialize it. That's broadly how I think about crypto gaming as well in cases where it might work, right? It's like if you could play RuneScape versus playing RuneScape that's like 75% as good, but maybe you could make a few bucks. I feel like you play the second one as long as the quality like drop off isn't massive. Right. So I think stuff like that is really cool. I'm all, like, I've always been a DeFi guy. So I think that, like, I'm super excited about the DeFi ecosystem there. There's a group called Shogun that was incubated by us, as was PuffPod, the vape turn one. That's really exciting. And those guys are effectively building um, what's the best way of putting it? They're building a platform that allows you to trade any asset from any chain without any difficulty there. As in, if you want to go from Seiyan on Sei to Bowden or DJT on Sol, they make that trade route possible, and they have some very interesting just-in-time liquidity vaults that allow you to turn MEV effectively into trader extracted value and like put that back in the hands of the user. So basically, an intense layer slash intense slash solver system combined with those just-in-time liquidity vaults that allows you to get the best execution possible without ever leaving your home network. I think that kind of stuff is really cool. There's 0 day to expiry options with the guys from IVX. There's credit default swaps and distressed debt on chain from the guys at Concrete Finance. Dude, that's one of my favorite ones more recently. Founders, a prolific on-chain degen, but trained as a surgeon at Oxford, then was a VP for years at Point 72, then was absolutely in the trenches buying and selling JPEG tokens with me. Little did I know. And has now built, one of the most interesting on-chain derivative systems I've seen. So all that kind of stuff is coming to the eco.
It's pretty
Um,
sweet. So where are you guys aren't on mainnet though right now, right? You just launched
no, no,
testnet,
yeah.
right? So how did you get all these people to start building on just testnet? Yeah, that's been I think that's been very difficult in general for people to get any activity prior to mainnet launch. And I mean, you're talking about all these projects as though I mean, seems like you have a lot of projects even though you're still on testnet, right?
Yeah, for sure. I think that like for us, man, it was seeing that if we actually took a very proactive approach to this, it's very possible to get people to build, especially if they understand that um, they really have an opportunity to like do more with their applications on Berachain than anywhere else. Like I think the fact is like proof of liquidity feels tangible. It feels like something where it's not just like, hey, we're going to give you this grant and like please stay with us for a few months. It's hey, there's a way that you guys can actually be effectively enshrined into the block creation slash block rewards process on a chain. And I think that is kind of special for applications in terms of A, just thinking about their own roadmaps and capital efficiency, and B, I think tapping into the culture that's been built as well, right? I think there's like a very like collegial like feel of camaraderie, and we've gotten like teams together in the past for dinners and events and token in Denver and stuff. And it's crazy to see them come together. The other thing that we've done that I think helps supplement that is we also have sort of an incubator program that's run at arm's length from the foundation called Build a Bera, and that basically helps incubate slash work closely with 5 teams every 6 months that are just meant to be cool, new, exciting things that are there to set a bar for quality in the ecosystem. And the goal there is really to help teams with go to market, help them figure out fundraising, all the stuff that actually is required to build a lasting company. Figuring out their tokenomics and management structure and what it takes to scale an organization internationally, how they have to figure out their taxes and like legals and all that kind of stuff, and use that to like give those guys a leg up. So I think we really do view the foundation slash labs, whatever you want to call it, as an extension of the ecosystem, and it's very much there to empower people. And I think that by combining that with proof of liquidity as a fundamental, with the culture that's being built of like fuck around, find out, but do it in a really effective way, you end up with a pretty magnetic group for builders. So I think that that's been our greatest edge, honestly, and also making sure that we don't like take our feet off the gas, right? Like the team has been incredibly competent when it comes to going out there and telling builders how they have an opportunity to win on Berachain, and how we're there to help make that a reality.
Well, I mean, I love that. You obviously need community. I experienced this the hard way, where back when Solana was trading $20, I fudded Solana, and the community just came out and took me out. And basically, I think that that was an early sign that the token was going to 8x from there, right? Like if you've got a strong community of people fighting to create valuable products and build things that people want, even in bear markets, and fight back against FUD, like, you have something lasting. So if you're seeing that community inside of your ecosystem already, that's like a phenomenal sign, even if you haven't made it to mainnet. But one thing I heard you say that really kind of I found inspiring, I think our listeners would appreciate, is that, you talk about the gamification of activities that haven't been gamified yet, but should be, like vaping, for example, or quitting smoking. Also X to earn, right? Play to earn, or quit vaping to earn. It's obviously a massive use case for crypto. But I honestly think that one of the reasons why, with a few notable exceptions like Axie Infinity, it hasn't really caught on in a sustainable way, is because in order for your earnings to, you're earning tokens, right? You're not earning greenbacks. So in order for your earnings to kind of be sustainable and for them to hold their value, there needs to be, like you said, liquidity. And so there hasn't really been a chain until now that's kind of guaranteeing pools of liquidity for all these different types of applications, or at least building it in at the L1 level, the way that yours does. So I think that's super important in order to unlock that massive potential in crypto for X to earn applications to go live and scale.
Yeah, thank you, man. And like, we very much do see liquidity as a lifeblood of DeFi, and DeFi to be fundamental in crypto nowadays, right? I think everything you see, whether that's like the fantasy top like bonding curves or like pump fund stuff, or like everything is in some manner downstream of or tapping into a DeFi ecosystem, right? I just think that some things are more obvious than others. And I think that like, a lot of people think, oh, can proof of liquidity only be useful for DeFi apps? I don't think so, actually. I think it can actually play a role in a whole bunch of different things, because almost everything has some element of liquidity centricism, right? So I think that's also where I'm very excited in the long term. We're starting to see plans right now that are at very early stages for proof of liquidity being used outside of the Berachain ecosystem, if you will, for extensions. I'll leave that one a little bit more amorphous, but I think we'll see those assets doing a lot more than just providing liquidity on Berachain over time, which I think will be really exciting. I think we're seeing more like NFTs, games, social apps, all the stuff that is an extension of the culture, if you will. And then these L2s, which present their own like interesting world, right? Because the Berachain has its own brand, it has its own like selection of life, if you will. But I think we're seeing, highly competent groups from consumer, gaming, media, etc., go and build L2s that are going to roll up to Berachain and sort of take advantage of and draw on that native community, but also help to onboard like tens of millions of new folks in a completely sort of like in a same but different manner, if that makes sense. In that they'll very much be an extension or an arm of the brand, but they'll have their own ecosystem, their own lifestyle, their own culture that can go back and forth here. And I think that that's part of what also becomes very interesting about building this anonymously, in that we end up being a little bit amorphous in terms of what the identity of Berachain is, right? On one hand, people could view it as a DeFi chain. On the other hand, people can view it as a meme chain. On the other hand, people can view it as, an application acceleration layer, right? People can say, oh, it's like something between EVM and Cosmos. Like there's 100 different ways to view it. And I think that where things get really interesting is by having a number of different extensions of that brand that allow it to tap into all the different demographics. Like it's not us trying to boil the ocean. It's, can we in a B2B2C manner find enough ways to spread the good word in enough places where it actually makes sense, such that everyone has a reason to care about Berachain. And I think that like that's one thing that going back to that Solana example, I think they've been doing a really good job of that at different points in their life cycle. And I think that it's exactly what you mentioned, like having the community beat down, or the ability for someone to get absolutely, wrecked by a community, is one of the most bullish things possible. Saw that a ton back in the day with Link, and at some point Ohm and stuff. And I think we're seeing that too. But that only comes when you have people who care about all these different aspects of it, whether it was like, the Magic Eden ecosystem and the fucking like, oh my god, I forget what those robots are called, and then the Tensorians and all that, or the Deep End ecosystem there, or like Pump Fun and DeFi stuff. I honestly do think that they're one of the best to have done it so far, and I have a lot of respect for what those guys have put together as well, from a I'd say a longevity point of view, and also just like a scope and performance point of view.
Interesting. I mean, yeah, I couldn't agree with what you just said more. And in terms of like what our listeners care about, people that listen to a trading podcast hosted by traders tend to want to know, like, where's the money? How am I going to make money off of this somehow? And so just in thinking about how to bridge the gap between your community and the trading community, one thing that just immediately pops into my mind is, if you're building a liquidity focused L1, the money is where there's going to be liquidity for your tokens, for your earnings. And so I can kind of see, if I were to try and brand Berachain, it would be the chain where the chain where you don't basically get rugged by disappearing pools. I don't know if you want to brand it that way, but because you can't validate without basically staking liquidity into the network. I, Applications that touch Berachain are ultimately going to be more stable for people who earn tokens on those applications.
I think that's part of it, and I think like what I'd even sort of double click on even more is it's a chain that's built to provide the majority of its value that's being generated towards applications and users. Like ultimately, it's like validators to apps and apps to users in terms of like that flow of incentives, if you will. And I think it's there's a way that you could position it that's probably a little bit more bastardized, but it's like in a sense the chain rewards you to use it, right? The term that we've been playing around with internally is like this whole idea of like have your stake and eat it too. And that the whole idea is like, on Berachain, you go and you LP in whatever you want, you use whatever protocol you want. And if that protocol happens to be one of the ones that is whitelisted or that is receiving emissions from the protocol / the chain itself, then, you're getting whatever rewards that you normally would get, but you're also getting this additional upside in the governance token or / the emissions token of the chain, right? And then you can choose to use that to compound in whatever manner you like. You can go stake that with a validator that is incentivizing the pool that you're already, taking part in, and effectively use that to compound your own rewards. You can use that to stake with a validator that is effectively receiving incentives or bribes from another protocol that you want exposure to. That's like a long tail call option, effectively, right? There's I think a lot of game theory and a lot of different choices that the user has, all without sacrificing the basic behavior that they'd want to take either way. So I guess when I think about it, it's like you're getting to do what you want, or you're getting to pursue your average user behavior, ideally with a whole bunch of fun, cool new applications if you choose to use them. And you're just reaping the benefits of actually having exposure to a new ecosystem. So I don't think any system is truly perfect, but I do think that there's a lot more thought put into the incentive alignment across all parties here.
That's actually really exciting because this reminds me, like this particular conversation, the last 50 minutes of us talking reminds me a lot of the conversations that I used to have in 2021 or 2020 when people were actually building new and innovative DeFi applications. I feel like I haven't had a conversation like this in a very long time. Everybody's just so focused on like dogs with hats, which I look. I love a dog with a hat. Like I love
yeah, of
dogs
course,
that wear
good tech.
hats. I love them. It's good tech.
Yeah.
It's good tech. It's good community. It's good culture. However, sometimes it's nice to get in the weeds of something new and innovative. And the other thing is that not to talk bad about other projects, but a lot of the latest projects that release airdrops, a lot of the L2s, they're sort of effectively the same. They're all the same across the board.
Totally.
Right? It's just okay. Yeah, maybe this uses a slightly different version of ZK tech than this, but it's all basically the same.
Yeah.
And I think
No,
I think there's
110%.
been I think in the market there's just been a lot of fatigue from this.
Yep.
Because people are really tired, and the reason that they keep chasing meme coins are one, because of the returns, but two, because there aren't people working on or releasing interesting things, and it's just it gets very repetitive over and over and over. So I think a lot of people in crypto, the way that I would phrase it, have gone back from being users. Like I was a power user of crypto for 2 years, 3 years. I probably have used crypto less in the last, like actually messed around on chain less in the last 18 months than I did in like 1 month in 2021, because there were just so many things to do back then, right? And it almost seems like there's less to do today, which I mean I think there is, in terms of at least what I'm doing day to day. So it's kind of fun to listen to. We're gonna have to. Everybody should go check it out. Can we use the testnet? Is it public?
Yeah, dude, 100%. It's usable. It's pretty snappy. I enjoy it. And we're seeing a bunch of applications starting to go live on it. We basically moved over from our old testnet to a new one like about 2.5, 3 weeks ago. And with that, we're going to see a lot of the old guard redeploying. But there's already some pretty fun dApps on there to play around with. So I think that like that's exactly it, Avi. It's like we want to make crypto fun, right? I think that if there's any brand or any community that probably has a good chance of making that happen, from a vibe point of view and also from an application point of view, I think we've got a lot of shots on net over here. And I think that like what I care about is what I mentioned and what you just touched on, which is like net new things that you haven't seen somewhere else. And I think we've seen like a couple like flashes in the pan over the last 6 to 12 months. Like there's definitely been 4 or 5 times where I'm like, hey, that's something cool and new. But I don't think it's like as usual by any means. And our goal is to keep like a steady stream of interesting things on Berachain, right? Because my high level thesis is that like I think that most alt L1s or most chains that are not mainnet and maybe Solana, but I think mostly just not mainnet can really only sustain like 10 to 15 if you're really optimistic, maybe 20 applications that actually get a bunch of use without like a ton of like liquidity fragmentation and lack of real usability. And I think that that's ideally some degree of like a rotating set, right? I think there's always a few that will remain in that. It's like fucking English Premier League teams or something, right? There's always a few that stay up at the top of that league, but there's a few that swap out. But there's like a very solid cohort that ends up being at the front of that Cambrian explosion. And I want to make sure the Berachain always has like the coolest ones at the front of that pack. And there's some that are like really fucking fried. But there's some that are like just things I think could completely reinvent the way that we think about the industry, right? So on one hand, we have Bera.tv, which is like literally like, AI bear reporters that will talk about shit and eventually is going to turn into like a MapleStory or a megaphone kind of thing where you can use that for distribution of content and bidding over slots where you can actually like talk through people and whatnot. And it's effectively a content/distribution engine. Or you have like, Gummify, which maybe you met those guys at one point, Avi, but like, allowing you to basically borrow/lend against any asset in like an order book style under the hood with shared liquidity profiles as desired. So like, you know what I mean? You get the duality. And I think that's really important. Like you got to have your stuff that's just good fucking bant, and you got to have your stuff that's like future of finance, and sometimes they're one and the same.
I love it. I'm so on board with this, and I wanna mess around on chain again. Just talking to you about this. Like Avi, when are we gonna start tokenizing random people who are trying to quit smoking and like bribe them to fall off the wagon and play against each other?
Whole new
You're on
level
mute.
of the game, bro.
Avi, you're on mute.
Are you saying incentivizing people to relapse, Jonah?
Yeah, that is what I said, but now I feel bad for saying it.
No, it's okay. It's okay. Look,
It's just
I think it's look. If you can go one way, you can go the other way. We're all capitalists here.
My favorite was like we were trying to figure out like what that flywheel looks like. We're like, okay, so there's vape to earn, then it's like Zin to win, but like do you eventually go back to like straight SIGs? Like how do you continue this loop? And it's like maybe we shouldn't continue this loop. But
dude, honestly, I've actually SIGs are making a comeback.
I think SIGs are Lindy now.
I think SIGs are Lindy. I think people are getting tired of the blueberry ice vapes and like the strawberry raspberry sorbet, like inhaling that stuff.
I can verify that in the commodities industry, there's like for every one Gen Z with like the banana ice vape, there's like 3 guys outside at any given time smoking them.
Really?
Yeah.
That is edge.
Remember, return to tradition. Return to tradition. This is
exactly
what it's all about at the end of the day. So remember where you came from.
This is how we win.
Dude, the future of finance is good vibes. I like this. This is good.
I was talking to Tommy.
If I were to put the future of finance in anyone's hands, I'm happy to give them to you, Smokey.
You're too kind, Avi. You're too kind to me.
You just got to get the air conditioned bear suits for the future conferences.
Oh man,
I bet those things get hot.
Yeah, because I don't want any sweaty bears in charge of finance.
Yeah, no, it's honestly, you need the marshmallow style with the big fans and like a nice large headset, all the good stuff. Real decked out bear suits, putting the fundraisers to good use.
Amazing. Dude, well, we appreciate we appreciate you coming on, Smokey. This is definitely one of the most fun podcasts we've done.
Definitely.
So
cheers, man. I'm always happy to entertain.
We'll have to have you back on once you guys launch mainnet, and then you can meticulously walk all of our listeners through exactly how to make money on Berachain, and if they lose any money on Berachain, you can guarantee their funds, right?
Yeah, totally. That sounds exactly like something that my legal/compliance department would love.
I'm glad we're on the same page.
NFA.
Yes, nothing on this podcast has been financial advice. Please don't listen to us about anything. We are literally interviewing a bear. None of this is true. So appreciate it. But yeah, we'll catch you soon, buddy. Any last things you want to say to our audience?
Yeah, man. I guess I'd just say like would love to see you guys fucking around and testing out the Berachain testnet and playing in the community a little bit and keeping an eye on things when we go live. I think the goal for us is to when we think about what we care about in achieving going live, it's on one hand, helping to reach new users and making sure that like lots of people have an opportunity to get involved in Berachain. On the other hand, if the chain's called proof of liquidity, there better be a bunch of liquidity on it. So making sure we bring a whole bunch of capital into the ecosystem, and then doing right by all the application builders, community members, folks that have been riding with us for the past couple of years. So I just say, keep your eyes peeled, and if there's an opportunity to get involved, please take it. And if you happen to be like a retail trader, investor, builder kind of guy or girl who wants to get involved and start messing around on the most fun chain there ever was, then please hit us up, and we'd love to find a way to help. Shameless show,
Amazing. Great show.
Thank you so much for talking to us, Smokey.
Thanks for having me, guys. Much appreciated.